politics to the world of business. This is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. Well, as we come to air, the new Chancellor of the Exchequer in the United Kingdom, he is Mr. Jeremy Hunt, has been laying out in detail the revised budget before Parliament, something that he summarized earlier today, and this is part of what he had to say in that summary.
Taken together with the decision not to cut corporation tax and restoring the top rate of income tax, the measures I've announced today will raise every year around £32 billion. There will be more difficult decisions, I'm afraid, on both tax and spending.
So that's the new Chancellor of the Exchequer. Let's also hear, as we did earlier today, from the London Mayor, Sadiq Khan. And he talked about exactly what these revisions to the budget and the turmoil in the UK is doing to the taxpayers and the consumers in the United Kingdom.
Well, I've been speaking to families across London for the last few weeks, and I'm afraid the damage is already done in relation to exacerbating the cost of living crisis. Labour's been calling for some time, rather than using borrowed money to reduce the bills of families, to have a windfall levy on the fossil fuel companies making a massive amount of profit. The problem is, as a consequence of the government's policy, people are facing bigger rent bills, bigger mortgage bills, interest rates are going up, inflation is going up, and although the government's confirmed there'll be support, it's only for 6 months, not 2 years. And so it's another example of a promise made and a promise broken.
City jobs are down 30% this autumn, according to the latest report from Morgan McKinley. They blame partly the unsettled economic situation. Is London still competitive? You speak to investors. You know, what are they saying in terms of investment in the city?
I on a daily basis, speak to businesses, business leaders, business rep groups and investors. The underlying strengths of our city are still incredibly good in relation to our ecosystem, not just financial services, professional services, culture, tech, life sciences, higher education and so forth. This week we've had the London Film Festival, which is a reminder to those thinking about flirting with other cities across Europe about the joys of London. I'm afraid, though, some of the government's policies aren't helping. You've seen the impact on the markets of government policies. The irony is the Conservative government worship the market, love the markets, but the market doesn't love this government. And that's why actually I welcome the fact that this Prime Minister's appointed Jeremy Hunt to be the Chancellor, not using our country as a laboratory for their ideological experiments, but actually what our country needs is the choice of a fresh start, and that's why it's important for whether it's this Prime Minister for as many hours or days she has got left, or the next Conservative Prime Minister, they call a general election to give the British public and those businesses the chance for a fresh start under a Labour government led by Keir Starmer and Rachel Reeves. OK, just a last thought then. What are you most worried about? Is it blackouts for Londoners, or is it rent prices that have shot up 2.5% in London in August, year on year? The number of rental properties have gone down. We know that mortgage rates are going up. Is it blackouts or housing that's most of concern? It's a number of things I'm concerned about over the course of this autumn and winter. Energy prices are a big source of concern, even though there could be an average of only £2,500. That's a lot if you're in a low-income job. I'm worried about the rents. People will pay £3,000 extra at least over the course of the next year. Interest rates is a big problem. Even if you've got a decent job, if your variable mortgage interest rates are going to be going up, if you're on a fixed-term mortgage up for renewal, they're going to go up. That's a big source of concern. I've been told that there's an exceptional possibility of blackouts. Fingers crossed it won't happen. It's really important, though. There's a plan in place from the government to address that issue. The key thing for us, though, is to get some certainty and clarity from the government about their plans going forward. The problem is they announced policy today, they U-turn tomorrow. That's not certainty.
That was the Mayor of London. He is Sadiq Khan, speaking earlier today with Bloomberg's Caroline Hepker. And now we turn to someone who leads one of the major global banks. Ana Botín is Executive Chair of Banco Santander, which is diversified remarkably geographically. Welcome back. It's great to have you here. I want to talk to you about macro around the world, but let's start with the UK because we were just talking about it. You have a substantial operation in the UK. What is the confusion in the marketplace, this fits and starts, doing to your business over there?
It's great to be back, David. what a day, what a year, actually. So I'd say, yes, we are a big lender in the UK. We are one of the top mortgage lenders and with a very low risk portfolio, 40% loan to value. But clearly what is happening in the UK is affecting consumers, is affecting businesses. But I'd say the world is living through a period of, I'd say, unprecedented economic stress added by, with the geopolitics and the national politics. What's really difficult at times like this for governments, but also for businesses, is to get the balance right between what's urgent and important, which is fighting inflation, but at the same time, making sure we're laying the foundations for growth. And of course, fiscal policy has to be aligned with monetary policy. And I think that is the balance that was not right in the UK. That's what markets were telling us. And at the end, it's about, and I'm very pleased by the steps that have been taken. I think it's important to give stability and confidence as much as we can, not just to markets, but to consumers and businesses. You know, we're a big investor in the UK. I have high confidence in the strong institutions of the country. It's a very attractive place to do business, attracts talent from all over the world. So I think, the steps taken are in the right direction.
You talk about the global situation economically. I know you just come from Washington. You attended those IMF World Bank meetings. Give us a sense of the perception at Banco Santander of where we stand globally right now, because we have a lot of inflation around the world. We have a lot of central banks raising their interest rates, slowing economy, and also a war in Europe. How does that all come together? Because IMF is worrying about the possibility of a recession now.
Well, we're at levels of inflation we had not seen in decades. And we're also seeing government debt being at very high levels. So again, what's important, and this has profound implications for our customers, for consumers, for businesses, for society. And so getting that inflation down is really important. And, I like to say this is a disease that requires antibiotics. It's not going to be cured with vitamin C, right? And of course, you have the conflicting fiscal policies, and that's happening in many countries. And so making sure that they're not going one against the other is important. Coming from Washington, and of course, as a leader of a bank, I can say that this crisis is very different from what we had in 2008. We have a very strong global financial sector. This is incredibly important. As we've shown during COVID, banks have been part of the solution. We have 2-3 times more capital. Just Santander, if you look at the last 5 years, we've taken our core capital from about 8 to 12% and increased profitability from 9 to close to 14% ROTE. So, we're ready to support our customers, as is the banking sector, through what is going to be tough times.
How are you preparing for those tough times? Are you taking bigger reserves against the possibility of some defaults? I mean, whether it's in the United Kingdom or back in the United States or Latin America, for that matter.
Well, now that you mentioned Latin America and emerging markets, but specifically countries like Brazil and Mexico are in a much better situation than they were in the previous crisis. So typically, the current thinking is emerging markets higher risk. Actually, these countries have less debt, have followed prudent fiscal and monetary policies, and actually one of the few currencies that have strengthened against the dollar the last year are the real and the peso. They're up 5% against the dollar and much more against the euro. So, what we have done to get ready is what I just explained in terms of the numbers. In our case, we have the scale globally, but in market to be competitive. We have strengthened our balance sheet in a very significant way, and we have been very close to our consumers and customers as we have been during COVID.
Talk about consumers, because consumers drive so much of the economy, certainly in the United States, but elsewhere as well. What is the state of the consumer? How strong is the consumer from your point of view? Are you seeing any drawing back by the consumers?
So I think when I was here in April, I said the consumer was still strong. There is, at the high level, consumers are still doing okay. Savings is still there. However, there are, as I said, inflation has profound implications for businesses and people. And those that are, the lower income and the more, smaller businesses are already starting to suffer that. And that is why it's so important to bring inflation down.
As we face this set of challenges, I'll put it that way, around the world, what role is the strong dollar playing? Because the dollar is very, very strong right now. To what extent does there need to be more swap arrangements, things like that, to make sure people have access to dollars?
So the dollar, of course, is driving imbalances. I mean, clearly, Europe is suffering from that, importing inflation. To me, the best example I've seen is central banks in Brazil or Mexico raising rates to 14% earlier this year, ahead of the Fed. This is really important because this means that they're not importing inflation. Actually, to me, if you look ahead, Brazil, Mexico are expected to grow more than the US next year. And by the end of this year, we'll have 5% less inflation than Germany. Okay, so that is a very different situation. And so, the key here is having your public finances in good order. This is obviously not easy for many countries, but some of these countries have managed that. And that is the best way to get the economy back on a sustainable growth once we have tackled inflation.
Anna, in the past, you've talked about expanding in the United States. You're substantial in the United States, but even expanding. Are you still on that path, given all the challenges that we face? Does it still make sense for Banco Santander to be expanding? And is acquisition in the cards?
So no acquisitions in the cards. We did invest $3 billion during 2021. The U.S. business that we run is a very different one from our international competitors. In the consumer space, we're at-scale lender. We originate assets profitably. We fund those assets with retail banking deposits. This is a sustainable business model. It is similar and actually competitive with the at-scale consumer lenders in the United States. And the proof is in the pudding, right? So last year, we delivered above 20% return on equity. We are on track to meet our medium-term goals, but also this year on track to be around 20% return on equity. So these are, this is a great business that leverages on the group's strengths in auto.
Just very briefly at the end, is inflation hurting your bottom line? I mean, because you have increased costs too.
So look, we've had negative rates for 5-6 years. That is not normal. We're going back to a normalization of rates, and this is actually how the system should work. So net, banks, will have higher earnings. We'll also have some higher credit costs, but net, we should do better.
And it's always a pleasure to have you come visit. Thank you so much for dropping by. That's Anna Botín. She's Banco Santander Executive Chair. Coming up, we take a deeper look at the U.S. economy with Mark Zandi of Moody's Analytics. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Coming off those IMF World Bank meetings, we're now focused again on the United States, where we had those CPI numbers coming in hotter than expected for the second or third time in a row. To give us a sense of where the U.S. economy is right now, we welcome now Mark Zandi. He's Chief Economist at Moody's Analytics. Mark, thanks so much for being here on Balance of Power. Great to have you here. So what are you projecting right now? Let me cut right to the chase. Recession, are we going to have one? If so, when?
David, recession risks are awfully high, uncomfortably high, but I think we got a fighting chance to get through this next 12, 18 months without one. For me, the key is the American consumer. They're the firewall between an economy that continues to grow and one that goes into a downturn. And consumers in a pretty good spot. I mean, lots of jobs, unemployment's low, wage growth is solid, a lot of excess cash built up during the pandemic, leverage is low. I mean, if you look at debt service burdens, that's a portion of income that households have to devote to their debt to remain current on it. That's pretty close to record lows. They've locked in. Yeah, stock prices are down. Housing prices are rolling over, but households are still a lot wealthier than they were a year or two ago. So, just as long as consumers do their part, I think we can make our way through. But, having said that, obviously the risks here are something else goes wrong and we go into recession, uncomfortably high recession risks.
Yeah, it's hard to see how we deal with yet one more setback like we had, for example, the war in Ukraine. But before we get to that, what about inflation? Because it's seeming to be pretty persistent, more persistent than I think a lot of people, maybe even at the Fed, expected. What's it going to take to get inflation down? Yeah,
me too. I mean, obviously that report last week on September was pretty disconcerting, disappointing. Big price increases across a lot of goods and services. My sense is that as long as oil prices stay roughly where they are, 90, 95 bucks a barrel, and assuming the pandemic continues to fade away, particularly in Asia, and China is able to keep its factories running and goods flowing, I think inflation gets cut in half. Right now it's about 8%. It gets down to 4% by next spring. And then it'll take a bit of time to get it back down to the Fed's target, which is somewhere around 2.5%. But I expect that as the Fed's higher rates slow the job market, wage growth starts to roll over. And also should point out rent growth is a big part of the high inflation right now. That should also come down too by mid next year, because we are starting to see market rents begin to decline because demand's weak and supply is improving. So add it all up, net it all out, I think we'll be back to the Fed's target by spring of 2024.
So 8 to 4 is a big cut. I mean, 4 is still well above the 2% band, but 8 to 4 is a big cut. How much of that's going to come from increased supply, and how much of it's going to come from reduced demand, even demand destruction, because of the higher rates?
It's mostly on the supply side. In my view, obviously this high inflation is both demand and supply, but in my view, it's mostly about the supply side of the economy, the pandemic and the Russian invasion. And actually going from 8 to 4, David, is mostly just about arithmetic. I mean, if oil prices, gas prices stay where they are, say around $4 a gallon for regular unleaded, then on a year-over-year basis, we should see the CPI, the consumer price inflation, start to moderate. Because we saw some big price increases, about a year ago. So getting to 8 to 4, that, nothing's easy here, especially when it comes to inflation. But, the arithmetic's on our side. We just need to have those oil prices stay roughly where they are.
So oil prices staying where they are, as I understand the math, it really helps you on the headline number. But what about the core number? Because what we saw in those numbers last week was headline actually came down a bit, core's going up, and if anything, expanding out.
Yeah, well, I do expect a big part of core is vehicle prices. That goes back to supply chains. Supply chains are continuing to improve. And if the pandemic continues to fade away and supply chains begin to continue to ease, we get more vehicle production across the globe, inventories start to build, and we should see some price declines. And that would be, really helpful. I mentioned rent growth. Rent growth is really critical here. We're seeing less demand and more supply, a lot more supply, and that getting that moving south. And then finally, the key to core is obviously the labor market and wage growth. We're at 5% wage growth. We need to get down to like 3.5%-ish. That would be consistent with the Fed's 2% target and 1.5% productivity growth. And it feels like wage growth is starting to top out and the labor market is starting to ease here. But, I don't want to sound too Pollyannish, David. This is going to be difficult. But, I have to say, in my view, still doable.
So let me ask you about two other questions. One is the number of what the terminal rate is likely to be in order to get that 8 down to 4 that you project. And related to that, the unemployment number. What will unemployment look like with whatever terminal number you think it's going to be?
Yeah, so, the investors are kind of thinking the Fed raises the funds rate, the key rate they control, 3/4 of a point when they meet in November, another 0.5 point in December, another 1/4 point January. That puts the terminal rate somewhere around 4.5 to 4.75%. That's kind of sort of where I think it's going to go and where it's going to stay. There's a lot of hand wringing about where it goes after that. But in my view, going from 8 to 4, slowing job market, wage growth rolling over by next spring should be enough evidence to the Fed that they can stop. That's the end of the story in terms of raising rates. Not that they're going to lower rates anytime soon. That won't happen until they clearly see inflation back to target, not until 2024. But then they can start to moderate that. But I think the terminal rate is 4.75%.
So, Mark, one more, if I could. As we talk about this increased supply, in the past, a lot of that has come from trade and globalization. It seems that we're retrenching some. We right now are seeing the 20th Party Congress over in Beijing. It doesn't look like we're going to shake hands and make up anytime soon with China. How much are you building out of increased global trade, increased trade with China, and reducing some of those barriers?
Well, I think we are deglobalizing. I think there's no going back on this. Xi's moving in a different direction. The U.S. is moving in another direction. We are pulling apart. And that, you're right, that is inflationary. I mean, it was the globalization, the integration of the Chinese-U.S. economies for the period after China entered into the WTO in the early 2000s that really worked to weigh against inflation. But that's over. And it's going to add to inflation. But that's not, a matter of, that doesn't matter a lot in a given month, a given quarter, even a given year. That's going to play out over a long period of time. So, that headwind inflation, globalization is turning into a tailwind deglobalization, but that's a tailwind or a headwind that's going to blow over a longer period of time. Something to consider a longer run.
Yeah. Mark, it's really helpful to have you here. Thank you so much for joining us. That's Mark Zandi. He's chief economist at Moody's Analytics. Still to come, we're going to come back to the China question. We'll go through the Chinese President Xi's speech to the Party Congress over the weekend with Bonnie Glaser of the German Marshall Fund. This is Balance of Power on Bloomberg Television and on radio.
Turning earnings season is here.
Markets bracing for another big earnings season.
Everyone is expecting it to be poor.
We've had big markdowns on earnings.
Bloomberg breaks the numbers first.
The bar has already been set pretty low.
The big question is, can it go lower? We're seeing some pretty bad earnings already from those who have reported.
With exclusive expert analysis.
Which aspects of the market are not sufficiently priced?
Is this a macro huge headwind?
There is some really bright light at the end of this tunnel.
When is this floor going to come? When can I start buying?
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It is Monday, and we are already off to a strong start for the markets, particularly the equity markets, at least if you're long. Short, maybe not so much. Let's turn to Kriti Gupta to bring us up to speed. So what's going on? This looks exciting.
Yeah, almost a 3% rally on the S&P 500. You would think that all is good again in the world, but that is part of it, at least when you look across the Atlantic. But there are some other factors to be aware of here. Part of it is simply a weaker dollar. You are also seeing a little bit of a technical bounce. Remember, even with this 3% rally, stocks are just where they were 2 trading sessions ago. So the progress isn't as exciting as it may seem on an intraday basis. And of course, you do have tech really pushing a lot of that. Tech and financials, which I think is interesting. A lot of this does have to do with the earnings story. So your Amazons, your Microsofts are leading the charge. But then on the same hand, you also have your Bank of Americas, your Goldmans, a lot of that trading revenue really boosting the bottom line. Think volatility. That always serves some of these banks' bottom line quite well. But also Bank of America seeing interest income rising 24%, so setting a pretty good tone.
Yeah, they don't mind higher rates. Higher rates work just fine for them on their deposits, right?
Yes, absolutely. That, and then on top of that, like I said, the weaker dollar really helping out there.
In the meantime, we've got a lot of commotion again over the United Kingdom. How much of that may be spilling over here? Because people seem to be relieved, certainly in the United Kingdom.
Well, it certainly was, because remember, with that stock rally, you're also seeing a bond market rally, and that's going to be following what you're going to see in the gilts market as well. This idea that Jeremy Hunt is now kind of hitting this massive U-turn on Liz Truss's policy, to put it lightly, and he is a trusted name, so a little bit of a sense of stability returning to that market, pushing the cable rate, the pound versus the dollar, up to 114, and with that strength, you see that dollar weakness, which once again, feeding back into the equity market. It is a very fun domino effect for the longs, as you say.
Well, listen, I'm not going to argue against this market. It looks really great, but I wonder, has the market, do you know, really discounted in what we're expecting in the terminal rate for the Fed funds rate right now? Because I've seen some analysis, it's not fully there.
Yeah, I would agree with that, and it quite hasn't. That's why this kind of rally that you're seeing of 3% is a little bit hard to believe. John Stolfus over at Oppenheimer, a permabull, said it best. He says, we're still bullish on equities. We just don't think that the Fed is going to be able to curb inflation that fast to stick with our previous targets.
Those terminal rates keep going up and up. Thank you so much to Kriti Gupta, and you can catch her again at 1 p.m. Eastern Time, where she'll be anchoring Bloomberg Markets. Coming up, it's our Monday midterm 2022 election preview with political contributors Rick Davis and Jeannie Shanzano. And this is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We want to keep you up to date with news from all around the world, and for that, we turn to Mark Crumpton here with the first word.
David, thank you. UK Chancellor Jeremy Hunt set out more details of his critical overhaul to British lawmakers in Parliament today. The update comes after earlier announcing he would rip up most of what was left of Prime Minister Liz Truss's economic program. Labour's shadow chancellor Rachel Reeves responded to Hunt's comments.
Does the Chancellor accept that once credibility and trust have been destroyed, it cannot be simply regained by a series of zigzagging, chaotic U-turns? Will he and the Prime Minister apologise for the costs and anxieties laid on families? Can he admit once and for all that the market turmoil we are in was directly caused by the disastrous decisions of his predecessor and of the Prime Minister?
Hunt also announced a new 4-person Economic Advisory Council. Meantime, the European Union deployed a monitoring mission along Armenia's border today after clashes last month that killed hundreds of soldiers on both sides. The team of up to 40 experts aims to, quote, build confidence by reporting on the situation. The EU presence will last no more than 2 months, it said. France is bracing for more work and travel disruption today as labor unions ask workers across industries to join a walkout. The strikes come as some refinery employees demand higher wages as inflation dents purchasing power. Ports, energy production, and trains are projected to be affected, with Eurostar already canceling 6 journeys. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. Well, the two midterm candidates for Senate in Georgia, Raphael Warnock and Herschel Walker, held a debate last night, and one of their points of disagreement was over abortion.
Now, on abortion, I'm a Christian. I believe in life. And I tell people this, Georgia is a state that respects life, and I'll be a senator that protects life.
We are witnessing right now what happens when politicians, most of them men, pile into patients' rooms.
And that debate actually happened on Friday night. I misspoke. I apologize. Well, all of this leads us to midterms 2022. That's our regular Monday preview of the elections coming up 3 weeks from tomorrow with our political contributors Rick Davis and Jeannie Shan Zaino. So, Jeannie, I'll start with you here. I heard over the weekend a fair amount that really it's down to 3 Senate races that will determine this. And they were Pennsylvania, Georgia, and Nevada. Is that right?
We keep hearing that if the party that wins 2 out of those 3 will take the Senate. Now, there are some wrinkles that enter into this. So, I think those are the states we're paying the most attention to. But there are other states to watch as well. And I'm going to throw you for a loop, David. One of them, which I never believed I would be saying, is Iowa. We have a poll out of Iowa, of all places, which shows that Chuck Grassley is within a margin of error. He's running for his 8th term. He's 89 years old. And now, do we expect that that's going to flip? Probably not. But those are the kinds of things that we're seeing this late in the game. But I do agree with you. Those are the 3 states we're most watching in Nevada, Georgia, and Pennsylvania.
So, Rick, is President Biden sort of rooting for Chuck Grassley because it makes him look young?
Well, he certainly does make everybody look young, but I wouldn't worry about Chuck Grassley getting reelected. He's got an institution going for himself. I mean, he's probably got 5 generations of voters who have repeatedly pulled his lever. So I think Iowa is sort of the undercard here. I think that the races you described, Pennsylvania being the only Republican hold and the other 2 being Democrat, I like the odds of only having to hold 1 and pick up 2. And so I think that these are all close races, and I think that they aren't going to be very clear to us until Election Day. Maybe even well after Election Day, if all these races are within the margin of error, we might be having counting going on for quite some time and really not knowing what the Senate is going to look like for quite some time.
Yeah, and to Rick's point, the 9 key races that most people are watching, they are mostly within the margin of error. And just take a look at Georgia, where early voting begins today. You have a very popular Republican governor there who seems to be ahead of Stacey Abrams in that race. But you have this close Senate race there. And if they don't go over 50, there's going to be a runoff in Georgia. So that would be one case where we may not know on election night. But with all of the questions about electoral integrity, there are other states in which we may not know on election night as well. So we're going to have to watch out for those. I'm paying particular attention to mail ballot states where we may not see certifications in some of those races for a week or so if they are particularly close on election night.
So, Rick, this isn't just business. It's sort of personal for the 3 of us because we're going to be covering on election night. We may not be done. We had Frank Luntz on last week, actually, and he said, look, there's like a record number of races that are within 1%. Forget the margin of error, within 1%. And given the fact we have so many candidates who don't agree with the outcome of the last election in 2020, could we be spending weeks or even months sorting this out?
Sure, absolutely. I think Frank's spot on there. You think about it, during the presidential race in 2020, Pennsylvania, Arizona, Georgia, all these states were within 1%. And nothing's changed. We're in a divided country. No matter what the polls look like over the summertime, there's no question that Democrats were getting a bounce from the Supreme Court decision on Dobbs. But since then, things have been sort of returning back to homostasis. So, I mean, we're in a divided country, and these are really close elections, not because of the candidates who are running them, because of the voters who are voting them. And the voters are divided. And if they're this close, as Frank Luntz says, there may be weeks, if not months, to see runoffs in Georgia again, and just counting, as Jeannie said, may take some time.
Yeah, and one last thing to sort of make you shudder, David, about what's going to happen on election night. We've got 3 key states in Pennsylvania, Wisconsin, and Michigan, which never quite handled their absentee ballot laws in a way that will allow us to move forward quickly on election night or in the days that follow. So if those are within 2 or 3 points, we may see those go longer as well.
One last one. I'm going to direct it to you, Jeannie, mainly because you are a resident of New York. I don't think it's within the margin of error, but it looks at least like the governor's race may be getting closer than we thought it would be.
Yeah, this has been a real shock. You know, we keep hearing that there may be some, breaks in the blue wall in the Northeast. And the governorship of New York is one of those cases, as are some of the House races in New York. Now, we expect that Kathy Hochul will pull it out. She's the incumbent governor, never elected. She was lieutenant, became governor when the previous governor resigned. But she is getting a run for her money by Lee Zeldin. And the big issue that seems to be on voters' minds, crime. And Lee Zeldin has made a lot of, big case about that. There was even shootings outside his house the other day, and he was attacked on stage earlier this spring. So crime, a big issue here. And we haven't, thought that he would really be able to pull this out, but he may well as we move forward.
Well, and Rick, perhaps a larger point, Kathy Hochul, the governor of New York, hasn't been that clear, at least to me, on exactly what her position is on things like bail reform. She sort of wants to have it both ways. And I wonder if that's a larger issue for Democrats. It's pretty clear what the Republicans think when it comes to crime. I'm not as clear what the Democrats think.
Yeah, no, look, the Democrats have been sort of twisted up on this. It's very hard to navigate a crime issue. It's actually affecting a lot of Democrats across the board. And in New York, as Jeannie says, it is maybe the #1 issue next to inflation. And the reality is she's gotten a lot of pressure from the left flank of her party coming out of especially those boroughs in New York where she can't take a strong approach to the men in blue. And that has given Zeldin an opportunity, and one that he may steal the election because of.
So, Jeannie, give a little advice to Democrats running across the country right now. If there were one issue they should be hitting hard that they think they can win on, what would it be? I think I know for some Republicans. I'm not sure for Democrats.
For Democrats, abortion, #1. They've got to talk about that. Electoral integrity, and the response on crime is to pivot to guns. Republicans have allowed, or they have allowed discussion of 17-year-olds with semi-automatic weapons. That's something Democrats should hit back hard on. They haven't done that enough.
Rick, do you see any vulnerability for Republicans?
Look, I mean, there's no question abortion was a vulnerability during the summer, but it's faded, as it has in the past when it's spiked up. The reality is, as much as we'd like to see the democracy issue hitting bigger with voters, it's not. We see it all over the country in states like Arizona. It doesn't seem to have any impact on the deniers who are running for office there. And so I think that Jeannie has enunciated a number of issues that Democrats are trying to hold on to, none of which are going to save them this November.
Okay. So, thank you so much to Rick Davis, Stone Court Capital partner, and Jeannie Shandano of Iona University. We will be keeping them with us as we check out where the big money is headed in those midterms. Sonali Basak will join us for our latest installment of Wall Street Votes. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. The latest Federal Election Commission numbers are in, and they confirm what we might have expected. Donors, especially from Wall Street, are stepping up in the Senate races. Our Wall Street Votes reporter, Sonali Basak, is here to take us through the numbers. Sonali?
Thank you, David. We're going to zero in on the Senate Leadership Fund because it's a super PAC with close ties to Republican Senate Leader Mitch McConnell, and it drew in tens of millions of dollars from billionaires, including Citadel founder Ken Griffin and Blackstone CEO Stephen Schwarzman. Now, 2 of the largest donors in the party, that's according to Federal Election Commission filings released over the weekend. The PAC is focusing on campaigns in battleground states in an effort to reclaim the Senate for the GOP. And it's so large that it accounts for 45% of all Republican advertising spent in those battlegrounds. It's raised over $100 million in the third quarter, according to Bloomberg's Bill Allison. And in a separate Wall Street Journal analysis, it shows that Democratic campaigns across 10 10 heated races have outraised Republican counterparts. Democrats have also spent more in Arizona and Pennsylvania, but Republicans are outspending in the key state of Georgia, where Democratic candidate Raphael Warnock has raised more money than any other single candidate, according to the FEC website. And what are all these campaign ads about, David? Everything from abortion to immigration. But another Wall Street Journal report shows that thousands of ads have focused on inflation since January, because it's an issue that's unlikely to go away as the election approaches, with shelter, food, and medical costs remaining elevated through September in the last CPI readings that Americans are going to get before placing their votes next month.
Shonali, thank you so much for our latest installment of Wall Street Votes. That's Shonali Basak, who reports on financial issues all across Bloomberg. We are still with now our political contributors, Rick Davis of Stone Court Capital and Jeannie Shanzano of Iona University. So, Rick, let me put you on the spot. I'm sure that these big donors, the likes of Ken Griffin and Steve Schwartzman, like their candidates a lot. But what do you think they might be investing in here? Why do they think it's so important for them that the Senate turn over to the Republicans?
Well, these are, first of all, two of the biggest Republican donors all the time. So this is not a headline other than the largesse this time is extraordinary, right? They're really doubling down, as you say. I think what they're looking at is a chance to have Republicans take over the House and the Senate. The House has been kind of a foregone conclusion by most analysis for quite some time, even though the margins might be slimmer than anybody expected. But the Senate all of a sudden is starting to look like it can have a Republican margin, one, maybe 2 or 3 seat margin where they can actually transact business as Republicans. And I think that's what these individuals and others are seeing. It's a way to correct the Biden administration on economic policy, stop bad things from happening, but also have an agenda of their own. And I think this is where they're doubling down.
Well, Jeannie, I'm curious about that, stop bad things from happening. If the Republicans were to take the House, which most pundits think they're likely to do, why do they need the Senate? Because on the other hand, they can't get much affirmatively done on economic policy, can they, as long as we have a Democrat in the White House?
No, it'll be tough for them to get things done because it would have to then be bipartisan and bicameral, and that would be a stretch if Democrats maintain the Senate. You know, even if the parties are fairly evenly split in the Senate and the Republicans have it, but just narrowly, they won't be able to get to the 60 votes they need. And then, of course, they're confronting potential vetoes from a Democratic president. So it's going to be tough all around. And I think what's so fascinating to me about the amount of money that we're talking about here is the limited number of voters that they are trying to persuade. I mean, you were just talking about what Frank Luntz said. We look at, you know, the very small number of independents and persuadable voters out there at this point, and you've got large numbers of dollars going into that. And one person I talked to said, you know, it's almost as if we haven't figured out in campaign spending how to do it in a way that makes any kind of economic sense. They're throwing money at these ads, and those ads are reaching, by some estimations, only 30% of voters, most of them not persuadable. So I think in this day of social media, there's a long way to go on making this campaign advertising more targeted and making it work in the way people intend who are donating. And I think that's a big bridge that's got to be crossed as we move forward.
Rick, I don't know, but I think Jeannie might have been pointing her finger at you, sort of. You've run some of these campaigns. You've spent some of this money.
Not Rick.
How targeted is it? Because you hear stories about, even in a national election, like a presidential, it's down to a handful of zip codes. That's across the nation. Can they get that specific as we go into Georgia, we go into Pennsylvania, we go into Nevada?
Well, there's no question that there are fewer swing voters than there used to be, right? We've seen that mobilization in the United States. But also turning out your own vote is become a lot more complex. There are a lot of things that you got to do to try and get people out of their house or to mail in that ballot. And so that's what this targeting effort is all about, is slicing and dicing the electorate so that you can get the right message to the right person. The amount of data that people have today on voters is enormous. And so you can literally target those messages each message specific to each voter, especially on social media. I mean, half of these budgets you see on media are social media. It's not just TV, broadcast, and radio. And so the amount of money that's being spent in the social media delivery mechanism is really elevated a lot.
Jeannie, you're a political science professor. So does it work? Do we know whether it works? I mean, it sounds really good. We have a lot of data. We know all this data about things. I've seen a lot of situations where data turns into a Tower of Babel.
Yeah, it doesn't always work, and we know that. We know, for instance, in 2016, Hillary Clinton outraised and her campaign outspent Donald Trump by a lot. But to Rick's point, he was able to use his messaging apparatus on social media and elsewhere, and he was able to narrowly pull it out, not the popular vote, but the Electoral College. You know, normally you can say the probability is the campaign that has the most spending is probably going to win, but there are always those exceptions. So we do see a lot of money, and you know, the money is stretched also as we look to the lawyers that are going to be trying to fight these cases post the election day. So a lot of money out there in campaigns and elections today to try to hang on to these very potentially narrow, you know, Senate majorities, if you will, and House majorities at this point, not to mention the state and local races as well.
It's a good suggestion, Jeannie. We better start focusing on those lawyers and how we're going to
right.
pay those lawyers. We always like to pay the lawyers.
Like you, David.
Yeah, exactly. It used to be. Thanks so much to our political contributors, Rick Davis of Stonecourt Capital and Jeannie Shanzano of Iona University. Still ahead, stocks surging today on the heels of Friday's sell-off. More on markets with Bloomberg's Kriti Gupta is coming up next. This is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We're going to return now to the markets because they're having quite a Monday after having a pretty rough week last week. And here to give us the view on the markets right now is Kriti Gupta. So Kriti, what's going on? Still green on the screen, as they say, for equities.
Yeah, a lot of green on the screen. And this is no soft rally. 2.6% gains on the S&P 500. This is enormous. And this is, I think, where a lot of people start to get a little worried here, that this is what doesn't make for a sustainable rally, because you don't want high volatility and high gains at the same time. You want them to really be sustainable. And even if you look at, say, a 10-day chart, for example, for our TV audience, for our radio audience, what you'll know is that even this 2% rally really just gets us back to where we were 2 trading sessions ago, and even better, 5 trading sessions ago. So this doesn't actually show a ton of sustainable progress in the S&P 500. Now, I think what's kind of significant in terms of today's rally is going to be what's driving the moves. You have tech and financials, which are traditionally kind of on opposite ends of the trade. One is more defensive, your major tech stocks, think your Amazon, your Microsofts, your Apples. The other is going to be a little bit more cyclical, your Bank of America's, your Goldman Sachs, and of course that trading revenue really boosting a lot of the numbers for Bank of America, plus the net interest income. So from a sector point of view, it's kind of interesting. There's a little bit of breadth in today's market.
Okay, so let me put you on the spot. You mentioned volatility. I just went and looked at the VIX here, and it's at 30, which is not real low. On the other hand, it's well below where it's been 3 different times so far this year. So what is the VIX telling me, if anything?
Well, what's interesting about the VIX is what used to be a calm market, say 2-3 years ago, pre-COVID, your VIX was at maybe a 12 level. Yeah. If it hit a 15, you were worried. That was a bad day. Now that new number has become a 20. So a lot of people have been saying that when you start to see a VIX that stays below 20, that tells you that you have a market that isn't panicking, that isn't volatile in a post-COVID era. They also say that in a post-war in Ukraine era, that new number is 30. So what you really don't want it to get to is, say, even a 40, which has become kind of the new level post-European energy crisis. So for the VIX, I would say we want to get back down to a 20 level for it to really show that there is that sustainable gains in the market.
So when OPEC Plus came out with their decision, we were covering it a lot. There was a lot. The White House was very concerned about it. A lot of people were very concerned about it. And oil moved up some, but not that dramatically. It's not close to 100. What's going on with oil?
Yeah, Brent and NYMEX both in a little bit of a trading range here. Now, some of this is going to be the OPEC decision, but remember, even that OPEC decision, it came among a backdrop of a lot of Middle Eastern countries already not being able to meet their quota. So the base impact that you saw, it was 2 million barrels per day, I believe, on a kind of surface level. I think Bloomberg Economics did the math and said, well, actually, it wasn't 2 million in effect. It was something like 890,000, something that the market was kind of already pricing in, which is why you didn't see as a big of a reaction as perhaps you thought you would. On top of that, you also see a little bit of that dollar weakness. Think about how a lot of people are positioned right now. It's not just going to be about simply the stock market. It's going to be about the fact that a lot of people are positioned quite long into commodities at a time when a lot of people are calling for a recession at the same time.
Pretty interesting. Thank you so much, Kriti. That was really very helpful. That's Kriti Gupta. And once again, you can catch her again at 1 p.m. Eastern Time on Bloomberg Markets, where she will be anchoring. Check out the Balance of Power newsletter. That is on the terminal and it is also online. Coming up, Balance of Power will continue on Bloomberg Radio. In our second hour, we'll talk to Jacob Kierkegaard of the Peterson Institute about the new British Chancellor and of the Exchequer's new budget and what is going on over in the UK. This is Balance of Power, and we are on Bloomberg Television and on radio.